All right, today we are diving deep into a financial report that looks at Donald Trump's crypto portfolio. And let me tell you, it's a wild world of meme coins, shell companies, and billion-dollar valuations that seem to just pop up out of nowhere. We're going to follow the money, see how this all works, and figure out what it all might mean. So let's start with the big one. How much is Donald Trump's crypto portfolio actually worth? You'd think that'd be a simple question, right? But it's got a wildly complicated answer. Depending on where you look, the numbers are so different, they seem like they're describing two completely separate realities. Our mission today is to understand why. Okay, so on the one hand, you've got valuations floating around $93 million. Now, that's still a massive number, obviously, but it's a more grounded figure from a specific point in time. Let's just call this our baseline. But then you see figures that have shot past $20 billion with a B. So how on earth is that possible? How can one portfolio be worth 93 million and also 20 billion? Well, the answer isn't about picking one number. It's about what's actually inside the portfolio. So first, let's unpack these assets. Because what's in this digital portfolio is really a tale of two completely different financial strategies running at the same time. The first type of asset we need to talk about is the meme token. You've probably heard of these. Its value isn't tied to a company or a real-world product. Nope, it's all about pure internet hype and market mood swings. Think of it like financial energy that's just captured from social media. It is the absolute definition of high risk, high reward. And this is exactly where we see that split between reality and paper value. The Trump meme coin, it generated hundreds of millions in real cash from sales and trading fees. But its on-paper value could swing wildly into the billions just based on pure speculation. Now, the key detail, as the report points out, is this. Trump-affiliated entities control a whopping 80% of the total supply. Remember that number because it is absolutely crucial for what comes next. Now, this second major asset in the portfolio is the complete and total opposite, a stablecoin. Its entire reason for existing is to avoid all that crazy volatility by pegging its value to a real-world asset, like the US dollar. It's built for stability, not for speculation. This brings us to the USD1 stablecoin. The report shows its profit model isn't about riding hype waves. It's a classic banking play. You earn interest on the cash reserves that back the coin. This very same stablecoin was also the vehicle for a massive $2 billion investment from a UAE fund, and the Trump family holds a majority stake in its parent company. So there you have it, the two sides of the same portfolio. On one side, you've got this speculative rocket ship that's fueled by pure hype, and on the other, you have a solid financial anchor designed for stability and long-term income. The cash is coming in from two completely different playbooks. Okay, so how does any of this solve our billion-dollar question? Well, it all comes down to the huge difference between paper wealth and actual spendable cash. So let's follow the money. To really get where the cash comes from, we have to understand something called a liquidity pool. Just imagine a big digital pot of coins that anyone can use to trade. Now, the super important part is this. The people who supply the coins for that pot, they get to keep a small piece of every single trading fee. It's kind of like being the house at a casino. You make money on all the action. And here it is, the punchline. Remember that 80% ownership of the Trump token we talked about? Well, the report finds that by supplying that massive share to the liquidity pools, the creators get to collect the vast majority of fees from every single trade. They're effectively turning social media hype into a constant flowing stream of cash. But wait a minute, who exactly is collecting all that cash? Well, trying to follow that trail leads you right into a corporate maze, one that seems designed from the ground up to hide who really owns what. Just take a look at this ownership trail. It starts out simple enough. Donald Trump owns a company called CIC Digital. But then CIC Digital co-owns this other company, Fight LLC, with a really mysterious partner, a company that was registered by a firm that specializes in creating anonymous shell corporations. And just like that, the trail goes cold. And to make things even more confusing, the report found that the very same LLC name, Fight LLC, was used in SEC filings for a totally unrelated money-lossing MMA business. So the investigation raises a pretty big question. Was this a deliberate move to muddy the waters and hide the entity's real purpose as a vehicle for all this crypto revenue? Okay, now let's zoom out, because the report argues that none of this is happening in a vacuum. It actually maps out what it sees as a deep, symbiotic relationship between politics and profit. The report then lays out this timeline of events, suggesting there's a pattern here. It points to a pro-crypto executive order, a presidential pardon for the founders of a big crypto exchange, a former advisor landing a key role at the world's biggest stablecoin, and it all seems to culminate in that massive $2 billion investment from the UAE, an investment facilitated by the family's own stablecoin. And this leads directly to the report's questions about foreign influence. I mean, you've got direct financial ties to a UAE state fund and reported deals in Pakistan. The analysis basically asks, are these just business deals, or are they a form of financial soft power, a way for foreign governments to build relationships with a powerful American political family? So what's the big takeaway here? Well, the report concludes that this model, where political actions appear to directly benefit the value and success of assets you personally hold, creates a situation that our traditional ethics and financial oversight rules were just never designed to handle. Which leaves us with one final huge question. Is what this report documents just a string of really savvy business deals in a new digital world? Or is it an entirely new blueprint for how political power itself can be turned into profit? The answer to that could redefine the relationship between wealth and influence for many years to come.